Ever wondered how the stock market works? Well, think of it as a bustling marketplace. Instead of fruits, vegetables, or handcrafted goods, this market deals in shares. But what are shares, you might ask? Simply put, shares are little pieces of ownership in a company. When you buy a share, you're buying a tiny slice of that company. Companies sell these shares to raise money. They might need funds to expand their business, launch a new product, or maybe even to weather a tough financial period. Just like you might invest in a new car or a house, investors buy shares in companies they believe will grow in value over time. The stock market is where all of this buying and selling happens. It's a meeting place for buyers and sellers from all over the world to exchange shares. So in essence, the stock market is a marketplace for businesses to raise capital and for investors to potentially profit. Now that you know what the stock market is, you might be wondering, how does trading actually work? Well, let's break it down. Trading stocks involves buying and selling shares in a company. And here's where the role of stockbrokers comes in. Stockbrokers are the middlemen who facilitate these transactions. They have the access, expertise, and resources to connect buyers and sellers, and they earn a commission for their services. Now, how do you decide when to buy or sell? That's where the concept of supply and demand comes into play. If more people want to buy a stock than sell it, the price goes up. Conversely, if more people want to sell a stock than buy it, the price goes down. This is the economic principle of supply and demand at work. But where do these transactions take place? That's where a stock exchange comes in. A stock exchange is a marketplace where these shares are bought and sold. It's like a super organized flea market, but for stocks. Some well-known stock exchanges include the New York Stock Exchange and the Nasdaq. To put it simply, the stock market is a giant global network where countless transactions take place every single day. It's a place where companies raise capital and investors make money through buying low and selling high. So trading in the stock market involves buying and selling shares through a stockbroker, with prices determined by supply and demand. Investing in the stock market can be a way to grow your wealth, but it's important to understand the risks as well as the rewards. The stock market, like many other aspects of life, operates on a balance of risk and reward. The potential for profit is certainly alluring. Imagine buying shares in a small startup that becomes the next big thing. Your initial investment could multiply exponentially, leading to significant wealth. But let's not get ahead of ourselves. The flip side of this coin is the potential for loss. Just as a company's stock can soar, it can also plummet. If a company underperforms or goes bankrupt, shareholders can lose a substantial portion or even all of their investment. This is why it's crucial to make informed decisions. Doing your homework is key. Research the companies you're interested in, their financial health, market position, and future prospects. Don't be swayed by hype or speculation. Make decisions based on solid information and sound reasoning. And here's another tip. Don't put all your eggs in one basket. This is known as diversification. By spreading your investments across a variety of stocks, you can reduce the risk of a single company's poor performance, significantly impacting your overall portfolio. Remember, while the stock market offers the potential for significant profits, it also carries substantial risk. Always do your research and consider diversifying your investments. So what have we learned about the stock market today? In our journey, we've discovered that the stock market is essentially a bustling marketplace for trading company shares. It's a place where the economic dance of supply and demand sets the rhythm, determining the prices of these shares. We've also highlighted the thrilling duality of the stock market, the potential for profit and the risk involved. There's a chance to grow your wealth substantially, but it's important to acknowledge that investments can also go south. We've emphasized the importance of research and diversification. Arming yourself with knowledge about the companies you're investing in and not putting all your eggs in one basket are crucial strategies to mitigate risks. With these basics in mind, you're now better prepared to delve deeper into the world of stock market investing. Remember, knowledge is power when it comes to investing.